Hello and welcome to this channel where I talk about trading in the crypto market. I am going to show you guys how I enter these trades, what I look for before entering the trades, and most importantly, some of the rules that I never break. Hello guys, so welcome back, and today we are going to be doing a quick update on the 15-minute time frame on BTC. And I must say we are looking bearish, boys. Ever since BTC broke past this support line where every time price has been holding here, let me box that up for you, like right there, right? Price has been holding up for that much. Then when price broke down, like I said, it is now looking arguably bearish, right? So why do we think that? See, support meaning whenever price came back into this zone, price always had a change in the sense where it bounced back up, always bounced back, meaning it was a range where if broken, trends shift, understood? And then when price went all the way down here, it went back up into this. Now see, this is what I call a fake. So now people think, oh wait, it came back into there. Maybe, just maybe, it was a fake the whole time, so maybe we're still bullish. And then when price started ranging, it went back up again, so another fake. But then boom, right from there, right? Boom, all the way down. And when price went here, it actually went even below this line before, which I cannot lie is looking very, very bearish for me. See, the thing is, in the past few weeks, BTC broke all-time high, all-time volume as well, 30k and all that stuff. Greed index is still at greedy. This is what I'm talking about by crypto, the fear and greed index when it's at an all-time high. Right here, 69. It has never been 69 in so long, which is just crazy. So now, by that it means retail traders are having FOMO, meaning they do want to hop in, but now that they see a clear ride down, like that's what everyone's talking about at the same time. Remember, I always trade the institution method, meaning wherever the biggest capital is a part of is at the same time what I want to be doing. So now see, now that it's looking like a clear downtrend after these past few weeks, now, oh shit, retail traders might be like, okay, so now we might expect a move down just how we expected a move up a while back. Isn't that right? So now the thing with that is, that might be a huge fake as well. So maybe the whole time we're still bullish, but then they're gonna try to bring it down like this, bring it down. Retail traders are in profit, but they didn't take profits enough because they're expecting a dump, just like how this one was, which is almost like a $3,000 dump, right? They're expecting a dump that big, and then they did not take out their money, then boom, institutions ride it all the way back up, and then just like that, everyone lost their money. See, that's the way the institutions trade, but what I'm trying to say here is that this could be an option. This whole thing here, what I just mentioned here, could be an option right there, or at the same time this is a fake, down and fake again, so now people are bullish. So from here itself, by this range trade, it might just shoot up here. And the thing is, BTC has been bear for a long time, and that bull run for like 1 week was a huge sign that it was going to be a bull. But what if at the same time the whole thing was a big fake? See, what I'm teaching here is my thoughts and my process method whenever I enter into trades like this. So what I'm trying to say is, nobody will ever be perfect. Nobody will ever be 100% win ratio. That's almost, it is actually not even almost, it is impossible, because I think at some points even institutions end up losing for this whole reason when they go against retail traders way too much. So now, the real thing is, where do we go from here, right? So there's multiple things we can do. Maybe we look at, if we're trying to do scalping, we go lower, we go 5 minutes, and then from that 5 minutes, maybe we just hop in scalping trades for a while now, mark out little, let's say like right here, right here to right here, right? Those are now the zones. Let me mark them out for you. There's going to be the supply zone. Oh wait, apologies for that. Right here, there's going to be this supply zone, right there. And then this one will be the demand zone, right? Okay, now from here, I tell you, I have one bias that I always stick by. I do plan to implement the Wyckoff method soon enough, so stay tuned for that one. So what we do here is we look for the lowest low, right? The lowest low. So now the lowest low is here, or we can do the highest high, which is up here. But what I am thinking is maybe you know what? Let's shorten this out a bit. It's actually almost very hard to find the perfect point on when to start the box method confirmation, but let's just see what works, right? Usually I just eyeball almost everything, which has been working more than well for me. So it broke out, came back in, and it zoomed out. So okay, this is a perfect one. This is very short time frame, hence very risky at the same time, yeah? So now price moved down here, and it actually was all the way back up here. And when price moved down, actually no, let's delete this. I want to show you price movement first. So from here, range, it shot down all the way here, right? And this was the point in line where that's what it's supposed to do, right? Break out of the box. Because at a higher time frame, one of these things is just like another bigger supply or a bigger demand. Keep that in mind. So what I'm trying to say here is, now that price broke down, where do we go from here, right? So we draw another box this way. So now this is what I'm going to do. So what I'm going to do is I'm going to watch, maybe price breaks down here, or if it doesn't, we delete this, and let's say price is range trading and it breaks out here. Then maybe I'm hoping, let's say right away, I hop in, let's say I place a trade right here. That's a what? Then I do a 1.5 up there. Somewhere, something like this, right? Something like this. Because this is where I expect price to hop back down. So now this risk to reward is not that big. So we lessen it down a bit. Remember, I always follow the 1.5 rule. Now see, this is the thing though. Now if price breaks up here, but it doesn't necessarily sell me out and I get tapped out, but it's actually in a bigger lower trend, what I will do is I'm going to be placing a supply order, a sell order, here, maybe up to 1.5 all the way till down here, right? So either way I would have made money. So my point, or like what I'm trying to say is, you guys need to find your own biases where you guys are profitable. That's what I'm really trying to tell you guys, because all of this is just one big scheme in my opinion. A lot of this is just people going up and down and unable to predict the market. But in reality, you should not try to predict the market, but instead try to predict the bigger institutions, because they are the ones that are always trying to manipulate, and like, you know, they're the ones who are reading the retail traders when the retail traders say are going for a long, or everyone's trying to buy, hop and pump the price. They want to sell it, they want to go against it, then all the liquidity is left there, which they claimed by making money. And then of course they also left down a little bit of liquidity, which turns into the supply or the demand zone. Then only then they'll come back and mitigate it. So by this I mean, of course, they shorted it down, and they have to come back and mitigate. That's what I'm trying to say. They have to fill back in those orders. So I can't lie, we are looking bearish at the moment in the long term, which is not a positive note in my opinion. I'm going to be staying out of swing trades for the moment. I'm going to be looking at maybe possible scalp. Even scalp actually are pretty risky at the moment, but the thing is, Whenever I scalp trade, I might be losing, I might be winning, but the scalp trading is more of it's more of a, how would you say, it's like a necessity to me, because it also helps me understand the market on a very low time frame, which I feel is a huge benefit if one can understand on the lower time frames how people trade. But keep in mind, I actually trade the 15-minute is almost the lowest I go. 5-minute is more on where I see price move in that time, but then whenever I enter my trade, it's usually on the 15-minute. I know people that actually go towards seconds just to see where price is, and then they trade the minute, or maybe they trade the 5-minute, but I trade 15 lowest. And if I go on swings, maybe 1 to 4 hour tops. Yeah, so just wanted to give you guys an update on that, and I hope you guys actually did enjoy this video. It's just a quick one, just explaining why I think it's bullish. It's mainly because of this trend line break, honestly, and the amount. Oh yeah, I forgot to show you guys the MACD as well. Take a look at this. Take a look at this. Oh shit, I don't know what happened here. This don't mind that. I don't know what happened there. But wait, let me put that down. What the fuck just happened? Yeah, well, I hope you guys enjoyed, and I'll see you guys in the next one, because I guess I don't know what the hell just happened. Oh wait, there we are. Yeah, so again, so just taking a look at the MACD here, you can see that the amount of sell pressure is really outweighing the buying pressure even at the moment. You see this big sell here. This is where the whole thing happened. Ever since then, we've been on the majority selling side compared to the, like, okay, this is what we do, right? This, just based on this, all of this here, huge sells compared to the buys, right? Now, of course, we are range trading, which is why this is what you see. But what I do is I compare, like, okay, this big of a sell compared to what, this buy, this big of a sell, this buy. You know what I'm trying to say? Like, the sell volume is a lot more nowadays. So what I'm trying to say is, guys, keep safe. And of course, scalps is what I recommend, although at the same time I don't, just because scalp in general compared to swings are a lot more risky. So anyways, thanks guys for watching, and I'll see you guys in the next one. Yeah, peace out.